Welcome to TheoTRADE. This is Don Kaufman. It's November 2nd, 2023. Just about 2 hours after the cash close here on this Thursday afternoon, with markets just on fire with extreme moves. Let me start right here in the SPX. Look, state the obvious. It's just a quintessential, what we term the rip your face-off rally. SPX up 80 handles today. But it's not even the 80 handles that's really kind of caught my attention. Again, it's the nature of how extreme some of the moves have been. It never does it justice when you're looking at this against expected move. But let me give you some of the numbers this week in the SPX to elaborate, if you will, how wrong the options market has actually handicapped the move. I mean, again, it's extreme, and it's not even so much about which direction. Like, I don't even care that it's an up move. In fact, the up move, if anything, helped us substantially in exiting positions profitably. We, sold a bunch of out of the money premium, and this rally helped us cover that premium. I mean, we're out of almost everything in terms of our short puts. We're getting rid of some hedges here. I mean, it's just on right now. But as I was saying, let me elaborate for a moment in a much more quantitative version than what this chart shows. So this week, what you're looking at here in the SPX, this is the start of the week. And again, to do it a little bit of justice here, I'm just going to kind of highlight, where did we start the week? Okay, and survey says somewhere down and around that 41, like 14. You realize how much further we're trading? Okay, look. Bottom line is you had an expected move this week of plus or minus. It was just over 96 bucks, right? So you're looking for this $96 move higher or lower, which unto itself is significant. Where we're right now, you got to realize this up here, this is the upper edge. That's the upper edge of the expected move that I'm like wildly highlighting, okay? That's because we are over 100 handles north of that expected move. And it's not just in the SPX. And that's why I said, the markets, they're on fire. And how do people look at this and they go, that's right, I knew it, it's a rip and rally. Okay, it's a rip and rally. But the point that you need to kind of understand in here is look at some of the recent weeks. You had a breach of expected move to the downside 2 weeks ago. Last week, we had a breach of the expected move to the downside. This week, over 100 handle breach of the expected move, which, by the way, is one of the most significant breaches to the upside or the downside that we've seen really in recent history. But moreover, I mean, take a look at the period of what I would term what I kind of call inefficiency. I mean, this is a breach to the upside, critical one, another critical one. It's just week after week, okay, where the marketplace is not, okay, efficiently handicapping forward risk. And that's a bit of a tell, especially for those of you that are, trading some short duration options. And I've been harping on this for months. You're trading short duration options. You got to be on the buy side of that. Not listen to anybody that's like, yeah, you go, wow, you sell some options. You're crazy right now. Because look at the moves. I mean, don't listen to me. Look at the moves themselves. I mean, every one of these is this just significant breach. But look, it doesn't just stop in the SPX. And, I'm definitely going someplace with this. Extreme moves, it doesn't matter whether it's to the upside or the downside. It's helping us in every way, shape, or form, especially with premium selling. One of the things, though, I've kind of picked up on is so the volatility has come down. It's kind of like the marketplace caught fire, obviously, after the Fed announcement. Why, I'm not entirely sure. I personally did not interpret what the Fed was saying as being dovish. Like that, the rate hike's over. I have no idea. That's basically what he said. At least in my opinion, that's what he said. But they have no outlook. And the marketplace loved it. Okay, give me nothing and I'll give you a rally. But the volatility, and again, aside the geopolitical risk, seemingly subsided. Like I just feel like, it's like, all right, the geopolitical risk right now is not going to proliferate. We're going to be okay there. Oil has kind of come in a little bit. That kind of calmed down to some degree, but volatility came off. Not as much as I would have expected it to, though. I mean, we're back in like a very standard, if you will, contango in the volatility futures. So for the time being, right, you're like, you're waving the flag. It's all clear. It's all clear. Just be careful. We really need volatility to collapse further at this point. And again, I'm not a big proponent of VIX. I also look at the dollar. And the reason I'm looking at dollar is lately I've been looking a lot more than just volatility. I look at the dollar and, okay, so the dollar, it backed off, but it hasn't broken like a critical trend. I'm also looking at other areas of the marketplace that it really does seem a little bit unusual, where gold hasn't really, gold is not, categorically speaking, not waving the all clear on this marketplace. Not by a long shot. Now that could happen, and that's exactly why I'm covering it, is because that's the kind of thing you want to look for in the days to come. Will gold kind of wave the all clear? Because the dollar is not. Okay, gold is not. And let's go to one of the most important market, bonds. Bonds, okay, it is again a quintessential rip your face off rally, but that actually really kicked into high gear yesterday. The volume is actually elevated in here. We're not out of the woods inside of the bond market, because again, this looks like right now, I mean, call it what you will. Could this be the beginnings of a rally? Absolutely, unequivocally, yes. Right now, I take it with a grain of salt. And I got to tell you right now, I am exiting any bond positions I possibly can. I have been in a ton of bond positions. People, I'm down now to one. So I literally have a one lot left in the bonds. Okay, sweet. So the bond trades have worked out beautifully, but I'm taking this one with extreme caution, because you're only like a day away from the bonds actually flipping back around. Again, one thing that I want you to take away from, this evening's video was I'm talking about, oh, the market's on fire. Okay. Ironically, I haven't even mentioned Apple yet, which is one of the reasons that I'm very suspect of the rip to the upside over here. It's a bit of a short squeeze. There's no question. This is a bit of a short squeeze. Now, a short squeeze, though, basically people start to buy to cover, right? In the S&Ps, they buy to cover in the S&Ps. We start popping back to the upside. Everybody's high-fiving, turns into a gamma squeeze, and we're off to the races. But again, too many aspects of it still reek of that, the quintessential, again, rip your face off rally or dead cat bounce. And that's why be suspect. Now, when I'm talking about extreme moves, and I say, oh, there's extreme moves everywhere, take a look at stuff like financials. You're like 2.5 sigmas out. I mean, this is ridiculous. Look at some of the equity products in here. Look at stuff like Tesla. Okay. And it's ironic because Tesla is, and again, I wanted to bring this one up because I have to appreciate Tesla hit its lower edge of the expected move on Monday, and on Tuesday, here we are at the upper edge of the expected move. That's not an extreme move that's outside what was expected, okay? But again, take that one to heart. Start looking at some of the Magnificent Seven. It's almost 2 sigma move inside of Microsoft. Okay, we'll cover Apple in just a moment. It's basically approaching a 2 sigma move here in Amazon. Okay, Google outside the expected move. Meta. Oh, Meta's interesting. Big break and actually faded a little bit. And last but not least, NVIDIA outside the expected move. Now, one of the things, though, that is also kind of striking in the midst of this rally, okay, is that a lot of it is financials. You can take a look at financials. Energy today, energy ripped to the upside. Okay, again, energy kind of ironic that it ripped to the upside, given the fact that oil didn't really do much of anything. And again, you want to be careful over here because it is short covering. But moreover, when you start looking at the expected moves, okay, and see if people pick this up for themselves, in terms of like, standard deviation and so forth, financials have actually moved a lot more. Like most of the tech stocks, even though that there's absolutely movement to the upside in the tech sector, okay, the Magnificent Seven, the performance of them is big, but it's not nearly as big as the financials. So there is still a hint of risk in the air as we approach the latter portion, of course, of this week and into next week. A hint of risk in the air. All right, last but definitely not least, let's take a quick glance over, of course, at Apple. Apple at this particular hour trading a little bit lower. Now markets are about to, futures start to trade. They're going to trade a little off over here, like Apple. So everybody's aware, has like a $6 and I call it 50-cent expected move and actual move right now. Spot on! Look at this thing. It's trading like 171. So that's actually going to cool the market just a bit. It's one of the reasons I'm recording this a little bit later this evening is I wanted to let the apple has come out. Okay. But again, mind you, the big takeaways here, everything feels extreme. It doesn't matter. Volatility, okay, is always thought of. The markets are crashing, they're volatile. Yes, but what you get in the midst, okay, of some of the heaviest down moves that you've ever seen are horrendous pops, okay? You'll not know right now after 2 days or some odd of rallying whether this is going to substantiate itself or pull back. If we are pulling back, okay, if we're going to pull back, you look right into that 42.11. And we talked about that substantially, okay, day in and day out. Look to the 42.11 for the possibility of a pullback. With that, again, I'll record the weekend update tomorrow. See how this thing actually plays out because, yeah, this marketplace, it's getting appled. It's going to get appled here in the after hours. It's going to pull things back a little bit. I think we'll get a better feel, though, for that order flow in the morning. Again, hands and feet, though, inside of the vehicle. Just because we're extreme to the upside right now doesn't mean the market can't get extreme in the opposing direction. Thanks, everybody, for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.